Good morning, you all. Today I want to share about Black Money Act, that is Black Money Undisclosed Foreign Income and Assets and the Imposition of Tax Act 2015, recently introduced by central government. Before seeing about the provisions of this act, what happened around that time, what is the background of the act, that will be easier for us to understand. See, first at the outset, US first enacted one act, FATCA, Foreign Account Tax Compliance Act, to combat that offshore tax evasion, avoidance, and stashing of unaccounted money abroad. For those things, they introduced FATCA. Then, not only that, they even one step ahead, they did one more thing: intergovernmental agreement. They entered into intergovernmental agreement with various countries. Even India also one of them. India entered into US IGA that in 2015, that effective from August 2015. This act, what this IGA says, the government, US governments and Indian government sharing the information about financial assets between them, about their nationals. So US will share Indians' assets there and vice versa. It is sharing information from US. Apart from that, there is one more international organization called OECD. That OECD, they formulated one convention on mutual administrative assistance in tax matters. So between countries, they will assist in tax matters wherever they require information about their nationals, they will share. This is the second step. Again, that OECD and G20, they jointly developed one more system called Common Reporting Standard, CRS. That is CRS on automatic exchange of information. They formulated one system, that is CRS, whereby every country sharing between the information about financial assets of other nationals. India is sharing almost 86 countries. The same way, India is getting information from 111 countries around the globe. So, India is getting information about our nationals holding assets abroad through this IGA and this CRS. They are getting all the information about assets and their income. It may be bank account, it may be company shares, what is the account number, or which bank, which company they have, if it is shares, what is the dividend earned, what is the interest earned, everything is being shared automatically under this CRS annual basis. So from this, India gathers various information, then it checks with our own information. That is what we file nationally. As a resident Indian, we are supposed to file return with all global income. Wherever we have, not only Indian income, we are supposed to disclose even foreign income also. If unless we disclose, this act will come into play, where they tax at not only to 30%, they penalize with 3 times of tax. So 90% is the penalty, 30% is the tax for all the undisclosed asset. Wherever we are unable to explain the assets held outside about the source of acquisition, we are supposed to pay on the fair market value at the time of assessment, not at the time of acquisition. It doesn't matter about the cost. They talk about market value. Wherever they get the information, they get to know the information, they value at the time. The fair market value gets the base. They tax the fair market value, not on the cost. So we have to be very careful on that. Wherever we have assets abroad, we are supposed to disclose in our return. Unless we disclose, even we would have included the income but not the asset, because in the income tax return there is a schedule called FA, foreign assets, again foreign source of income. There is one more schedule. One is for assets, one is for income. Wherever we have assets, we have to disclose it irrespective of its income. Same way, wherever we have income, we have to disclose in the FSI schedule. We need to include income also. If we omit this, we will be penalized. The penalty is much more. Per year it is 10 lakhs penalty. Recently you would have seen that even the newspapers, they advertised wherever you missed to disclose, you have a chance till 31st December, because filing rectified return, that is revised return, we can even revise the return, we can include wherever we omitted to include those assets. So it's a one more chance available still till 31st March. Better make use of it. Try to include everything. Even you may not have income in India, you may not have taxable income in India, you would not have filed the return, still if you hold assets abroad, you are liable to disclose in the return. Even you do not pay tax, you have to file the return irrespective of your income, whether it is taxable or not, or your taxable income is below the limit, you are still supposed to file the return with all foreign assets and assets details. So make use of it, avoid the penalty, be safe. Thank you.